Hello and welcome everyone. I am Rachel Deschelle, Head of Technical Research and Strategy for Schwab Center for Financial Research, and your host for this Trading Price Patterns class. Now, this is a webcast where we make the assumption that you are already familiar with the basic concepts of technical analysis, and we build on those by showing you different ways, different strategies to trade bounces and breakouts within technical patterns. Now, I am joined in the chat today by Mike Fairborn, my colleague here, and he will answer any questions, comments, requests that I cannot get to today. Please give him a follow on X. He's Mike Fairborn CS. I am Rachel Dash CS. And please give this video a thumbs up and subscribe to our channel on Trader Talk Schwab Coaching. Now, I know my intro was a little different for today, and I think a few of you may have caught that in my webcast on Friday, but I am no longer considered a Schwab coach. I am actually working now on solely technical analysis, technical research that we're going to make available for you traders here at Schwab. So a lot more research coming your way from a technical perspective. But rest assured, I will still be teaching this trading price patterns class. They know that this is my favorite class. It's right up the alley with technical analysis. So I'm excited that I will still get to continue to work with my Schwab coaching team. I'll be able to see you guys at all of the events and still teach this class as well. So just a little update for you for those that have missed Fridays. Now, today we have a ton of different patterns. We're going to focus on some in the financials sector. There's a lot of possible bottom reversals or bullish reversal patterns taking place. We're going to look at a few different setups, and then we'll kind of end this with that watch list of patterns. And before we get started, we're going to hit those important disclosures here. So options carry a high level of risk and are not suitable for all investors. The information that we're going to cover here is for general informational and educational purposes only and should not be considered any type of recommendation or advice. And we are going to go through the paper money software application. Keep in mind that there are some differences between paper money and live. So keep that in mind. And then as far as our agenda, we're going to go through a quick announcement. We already did a little bit of announcement, and then we're going to cover that market overview. We're going to start by reviewing past trades, placing new example trades, and we're going to walk through some trade management as well after we kind of place those looking at price patterns. Now, as far as our kind of setup here for upcoming workshops and events, we do have quite a few coming up. We have Chicago, middle of July. We have the Dallas Market Drive, beginning of August. We have our 2-day workshop for technical analysis and option strategies in Orlando, beginning of August. If you're going to be at Chicago or Orlando, place that in the chat because I will be there as well. So I'll be excited to see you, be excited to meet you, and we'll have a ton of fun. So we're going to switch gears and go into our Think or Swim platform. Let's take a look at what's going on in the markets and just kind of review some of this information. So the S&P 500 on Monday gapped above its 20-day moving average. We are now back above it. Well, this is telling us that that short-term trend is up yet again. Now, I want you guys to notice something else. We've also seen some improvements in breadth. I know I've shared some charts. I know some of the other coaches have probably shared some charts as well, where the percentage of S&P 500 stocks above their 50-day and above their 200-day moving averages have been increasing over time, even despite this little patch of weakness that we've seen, that little pullback. And even today, we're seeing the advanced decline line for the New York Stock Exchange move to new all-time highs. So that is telling us that while there may still be a slight bit of weakness on the index level, you're seeing a lot of strength in the internal market, in the market of stocks. So the stock market looks one way, but the market of stocks looks like it is improving. So definitely a couple things to keep an eye on. And then what we have now is maybe this little bull flag setting up here. So this is like a textbook bull flag pattern that we have. And since we're trading price patterns, we might as well mention this one. This is about a $320 measured move. So if we just kind of take that and place it right on the upper bounds of this minor consolidation the last couple days, that could set the S&P 500 close to, I mean, that's really close to 7,900, 7,900. So another 320 points to the upside that we could see within the next week or so, just given the price symmetry, the time symmetry that markets tend to appreciate. So we'll kind of have to see. We're obviously going to have to wait for a break higher above that little window there, but definitely something to keep our eyes on. And then I think we should definitely mention this one as well. We have the Dow Jones Industrial Average. It has just been the leader here, marching, marching, marching its way to new all-time highs. So there doesn't look to be any slowdown in this one in the near future, but really, if there is, we're probably going to look at this former highs area of support, probably right around this 51,670 level or so, right where we saw that bearish engulfing candlestick before with that weakness. But honestly, the Dow Jones Industrial Average is actually holding up a lot better than all of those other indexes because we really didn't spend more than a day below the 20-day moving average for all of this time, really since the beginning of April. So you saw each time we closed below it, the next day we closed above it. So this one has been pretty resilient here. So yeah, to definitely take a look at some of those constituents in that mix there. So let's take a look at some of our past trades that we placed. We reviewed this one last week. Not much more has changed with this one. What we're essentially going to do is just let us get assigned tomorrow. And then once we do get assigned, we're going to talk about selling a covered call on that one. So a little bit of the wheel strategy with SPIR. We sold that put, cash secured put. The price of the stock is trading a little bit below that at 18.46. So we're going to look for a little bit more income on that one and sell a put. Now, Prudential, we traded this one. If you remember, we looked out a little bit far in expiration, a few months out. We bought a call option, the 100 strike call there. I'll pull up the chart for this one. Let me just kind of type this in for us. Okay, we saw this massive, we should say, kind of massive cup and handle pattern here. We saw almost like the double bottom shape, but we entered on this break of a 2% break. Now price may go back and retest that level a little bit, but we have a couple target levels to the upside. So that's kind of what we're targeting there. And then we took another position on open. So Opendoor, we had, let's see, we had the 16th of October 2026 five strike call. We had 10 contracts there. So this is just because that pattern is so long term of how long it's been in this range. So if you guys remember, we were looking for a close above the low of or the high of the low day. So that's kind of what we're seeing here. We saw a little bit of a retest with that bullish engulfing candlestick right there. And then we're having a little bit of an inside day. So we're really targeting the upper bounds of this range. And if we can break through, we're looking for that measured move to the upside there. Okay. So I have a couple questions in the chat. Okay, so I had a question on the advanced decline line script. That is actually not a script, it's actually a study that you can find within the studies box. So if you just start typing advanced decline, and you can double click on this, that's how you add that study there. And if you want to, let's say, maybe you want to customize it at all, you can just double click it again and you can customize it, change the exchange. But the New York Stock Exchange is usually the one that we use. So it looks like we have answered some of the questions there. So let's take a look at some of these other charts that we're seeing here. I want to start with one where we just had a recent breakout. I'm going to pull up the chart. You guys tell me in the chat what the type of pattern you are seeing here. You may need to zoom in a little bit. I have this chart zoomed in so you can kind of see it pretty well, but we just had a breakout of a pretty familiar pattern that we've seen over the last few months quite a bit. I know we've traded a lot of these patterns, so what you're probably seeing here is, you guys guessed it, we're seeing this breakout from this double bottom pattern, okay? So we're hitting these lows in price where we're actually making a new high. So we're hitting the same amount of lows, but we're making a new high here, which is that first signal of that change in trend. So this is why we call that a bullish reversal type pattern, is because the lows are still the same, and typically when we're looking for a change in trend, we see higher highs, higher lows to give us an uptrend. But the first shift tends to happen with making a higher high, or it tends to form from making a higher low. And in this case, with the double bottom, you are seeing that this is making a higher high. Not quite a higher low yet, but you are seeing that higher high here. I do see something in the chat about an inverse head and shoulders. You're kind of going to have to show me where you're finding that. I could see where you're kind of maybe noticing the structure of one, where you're noticing maybe this larger type reversal type pattern that wouldn't necessarily follow exactly those rules, because we have a much larger right shoulder that hasn't made its way up to longer term resistance yet. But we can look at this even just short-term tactical opportunity here that just exists at the lows. And another thing that we can kind of look at, which we've looked at in prior classes before, is either using some type of momentum indicator. So sometimes we look at the RSI, sometimes we look at the MACD, whatever your preferred oscillator is. This case, we're using a bounded oscillator here to just tell us whether we're seeing some divergences, which looking for these divergences with these tops or bottoming patterns is really, really useful in understanding if the stock is going through a certain stage of repair. And that first stage of repair really exists when you see that first divergence. So I want to show you guys this one here. So we've talked about this before, but notice we see a lower low being made earlier on this year, okay? And if we look down at the RSI, right when those lows were made, if we take the point in where we connected those lows, those pivot lows, we're going to take the indicator and connect those lows as well. And that's going to give us a bullish divergence there. So typically, when you see a stock making new lows like that, because if we just leave all of this information out, let's just say we were looking at price, let's just say we were looking at price doing this, and this was like our current day. Well, this could tell us that, hey, we may be putting in a true low here. But a divergence only tells us that, hey, there may be a bottoming process that may start. That's not telling us that there's going to be a reversal right away. It's telling us that, hey, price may take some time to repair, may form a little bit of a base here. So this is kind of the early signs that you can use within your process when looking for a bottom type reversal pattern. And remember, as trend traders or as pattern traders, I'm thinking about this and speaking about this from a bullish perspective, but we want to buy high and sell higher. So we don't want to buy low right here and catch a falling knife on a downtrend. We only want to commit capital and put capital to use when we've already seen that repair. And so we have seen that on a shorter time frame here, just looking at the last month. Now, if we just look at this last month of time, we're going to take this and measure it. So we're going to take the top of the pattern or resistance right around 165 down to our lows at support right around 146. And that's going to give us close to about a $20 measured move. And so if we just place that at the breakout point there, what does that tell us? Well, that tells us that, hey, price may run into a little bit of resistance, which is where we've actually seen price retest this level before, right around 190 or so, 190, 191. And so if it does, this could actually create a longer term pattern. And so I want to actually remove some of these and kind of show you guys something. So if we take this from this perspective, this could create a larger double bottom pattern with even more room to the upside. Okay, so we're not going to be predictive here. We're not going to say, hey, we really think that price is going to go up to this level and beyond. We're not going to go there quite yet. We're going to wait for the market to prove itself to us. And so what we're going to do is just trade the really shorter term time frame right now. We're going to stick with that shorter term time frame and stick to that. We have seen some confirmation here. We have seen three closes now above, well, almost three closes now above this resistance. So that may give a trader a little bit of confirmation there. And we know our measured move to the upside could be a $20 move up here that we're kind of already making our way towards. So given the implied volatility percentile, maybe telling us that we're in a lower volatility regime, that could tell us that now could be a good time for an option buying strategy. Maybe we're getting a little bit more directional here. So maybe we could look at buying a call option at some of these levels. Now, if you wouldn't want to commit as much capital to say to pay for the entire premium on a call option, you could even look at a bull call spread. So we can look at a couple different scenarios here. So this month or this pattern took about a month to form. So what we could be looking at is about 2 months out from expiration for our option strategy, because we do know that when we have our options, that time decay gets closer and closer the closer we get to expiration. And about 30 days out from expiration is when that time decay really starts to kick into high gear. So we may be still looking to give ourselves about 2 months till expiration here to target really this 190 level here. So we're going to look at the trade tab. We're going to look about 2 months out from expiration at the 21st of August, 2026, with 65 days left. And we are going to look here at what our options are giving us. Now, we're going to look at some options that have some tight spreads. And so I see a pretty tight spread here with our 165 strike. So I'm going to click on that and highlight that. There's a lot of open interest there. We still have about a 10% spread between the bid and the ask. We have some light volume on the day. But still, that is giving us a couple different things to look for here. Now what we're gonna do is, since we're gonna buy a call option, we are gonna look a little bit in the money. We're gonna look for that option that does have intrinsic value here. We already talked about a couple different things like the bid-ask spread, volume and open interest, but now we're gonna dive into more of the Greeks, and these are gonna be kind of a theme that we're gonna look at with these other ones. We already talked about volatility sensitivity, and so our Vega is telling us that, hey, if that implied volatility goes up 1 percentage point to, let's say, I can't remember what it is now, but let's say it goes up 1 percentage point. That's going to move our option up about 28 cents theoretically. We have about 14 cents in time decay each day. And if the stock moves up $1, our option's going to move up about 62 cents and gives us about a 62% probability that our option is going to expire in the money. So those are a little bit higher odds there. We have a little bit more of a move if the stock moves in our favor. So what we're going to do here is we're going to look to use an OCO. So we're going to do a buy custom with an OCO bracket here. Okay, so essentially what this is going to allow us to do is just going to say, hey, we're going to place our entry order, and we're going to try to go for the midpoint here in this scenario. And we're going to say that we're going to look to buy, let's do 4 different contracts, because that's going to be our max loss is going to be how much we're paying. And so we're essentially going to commit a few $1,000s in this trade, about $8,500. So that is the most that we can lose. Now, we started with an account size of $200,000, and so we're not risking more than 5% of our account in any one trade. So we're staying within our $10,000 limit here. Keep in mind, though, that the most we can lose is that entire premium that we are paying. So 2135 times 400, because we're controlling 400 shares with those 4 contracts, okay? Now, our upside is unlimited, and that's because the stock price could theoretically go up to infinity there. That's probably not going to happen in the first place. It's probably not going to happen within this time frame, but it gives us that time there. Okay, so we're going to work with that because we want to be directional here in this sense. So we see a bullish reversal. It's been a short-term pattern. That's what we're going to look for. So what we're going to look at here, we're going to use something a little bit different. So I know in this class we use our price targets quite a bit. And so on our stock, we can say, hey, we're going to exit at this price. We can even use our conditional orders that say, hey, when the price of the stock reaches this price, get me out of this option. But another thing that we could use as well is we could say, hey, within the next 30 days, if everything else stays the same, we want to see what the price of the option would be if the stock price went up about $18 to our target price. So we can use this nice little Theo price tool, and you guys can see how I changed that on the option chain here. So I'm going to go to Theo price, and I'm going to say, okay, if the stock goes up $18 within the next month, so we're going to look at a month from now. We're just going to say, well, we'll use the 15th since that's about exactly a month or exactly 4 weeks. So we'll stick with that and we'll say, okay, that puts it at our target price. So let's say if the price of the stock reached our target price in that 30-day window, what would the price of our option theoretically be? Whoops, I gotta build this again. 1 second. I seem to do that all the time. Okay, so what would the price of our option theoretically be? So if you can look at this spread right now on our option, we can see the bid is 2030, the ask is 22. Right now, the mark price or the midpoint is 2115. So that's going to be where we try to enter at today. Now, if all of these factors stay the same, the price of our option should be close to $30. So that's a 50% return on this option. So we could go that route and place our price there. We'll just be a tad more conservative and we'll say $29, okay? So that's kind of the equivalent to putting that conditional order on your option. The only thing is we're assuming that this is going to take about a month in time. If it gets there quicker, the price of that option may get to this price quicker. So that's what we're going to kind of look for here as far as our upside, as far as our profit taking. So that's kind of the upside that you can see with directional options, which is why we're going a directional way, because it gives us more upside and it gives us ways of where we can manage our risk as well. So what we're going to do is we're also going to take a different method of looking at a stop order, a different way of managing our risk. So we're kind of doing it a little bit different this time. So if we look at the charts, we're going to see here that we've already broken significantly above this level, okay? And we knew that our support was right here at 165, okay? So if we just kind of put where this low was of this candle, this is around 165.52, okay? So if price does re-enter back into this pattern and break this low, this could be telling us that, hey, maybe we should get out of this trade. Maybe we should manage our risk to the downside, okay? So that could be one way that we could kind of go about this. And so let's just say within the next few days or the next week or so, let's measure what the price of the option would be if it went below 165. So that's, let's just say $7 move to the downside. So we're going to measure it this way. $7 move to the downside. What could it possibly be? Okay. And that's gonna tell us here. And of course, my order deleted again. Okay, so to the downside, we're looking at about $12.36, okay? So let me build this one more time. Sorry guys, today it's being a little bit um it's just testing my patience today with this platform. Okay, so we put that at 29. And then we're saying that if there was a $7 move, oh, and this is within the next week. So we're gonna go back and we're gonna say within the next week. Within the next week. Okay. The 24th. Okay. This is what the price of the option should theoretically be. Okay, so that's 15.58 if we did see a $7 move to the downside. So we're going to use 15.58 as our stop price. Keep in mind that that stop or that activation triggers off of the asking price. So when the asking price of the option is 15.58, that is when it would trigger. Now, this also stays within our risk parameters because if you think about our entry of 2065 to our stop, I mean, that's roughly about, we're going to put this at 65 to stay perfectly within that parameters. So that's going to give us about $500 on each contract, which stays within the risk parameters of our account of not wanting to lose more than $2,000 on a trade, okay? Now keep in mind there are some risks here because the stock could gap down overnight and kind of do things like that, which could fill our option price at somewhere a little less desirable or not even near this stop price. So keep that in mind as well. But we're gonna go with this setup here, give us a little bit of room to run. And we're gonna hit confirm and send. We're gonna put this in our price patterns class and we're gonna hit send. Okay, so that trade is in. So we talked a little bit about that trade. Now, if we do make it to that level, what we can change with our trade later on, we can talk about doing this as we manage the trade, is taking off half of our trade. So we could move up our stop as we go, but we could take off half of our trade up there and take profits up there. So that's another way to kind of go about this because if this does complete and let's say we get to that level and we actually end up breaking through that level, we talked about how this could be a larger double bottom pattern. So if that ends up being the case, well, we have even more upside that we can kind of go with, or we could work with another option strategy. So you can kind of see how we can kind of build on that and change our time frame for this trade because of the longer possible accumulation pattern that's existing underneath. So, keep in mind there. I have a couple of different questions. Why not set the exits based on the stock price instead of the Theo option price? Because with the stock price, we don't know what the price of the option is going to be. So we could always do like a limit offset order or something like that, or we could do a market order, but we don't know when or where the price of the stock is going to or what the price of the option is going to be when we hit that price. So that's why we're kind of guesstimating using that Theo price tool to give us kind of like a little bit of a guideline as far as, hey, if volatility stays the same, if we do see the symmetrical nature of time and price, kind of what our price of our option would be. Okay. So we are looking there. Now let's take a look at a couple others. I have another one for you here. So this is one that I was looking at earlier today. I actually showed you this on the watch list for a few, I think last week maybe. But for this one, you're seeing another double bottom take shape. Okay, so this is a textbook double bottom. You can see this double bottom took shape over the last 3 months. We just had this breakout the last few days. Okay, so price kept closing right on that level. And just yesterday, it kind of closed above that level of support. And today we're seeing a little bit of that follow through. And notice what you're seeing on the RSI with momentum as well. This is not a caution sign. Just so you guys know, this is not a caution sign when it gets to overbought territory because the the momentum can be extended for quite some time. And the most bullish thing a stock can do is remain overbought. And in uptrends, a stock can remain overbought for a long, sustained period of time. So this is just giving us confirmation of that breakout too. If you guys want to look for a little bit more confirmation, since we've talked about this quite a bit with price patterns, is maybe looking for an increase in volume. And you got that. So if you look at this increase in volume here, we had that big volume spike on the initial breakout day. So we had that big volume spike there. We've had a declining volume from that initial spike, which isn't a bad thing because the spike shows that participation there. But you notice that this little bit, the last few days of volume has been higher than what has been normal, than what you have seen prior. Okay, so that's giving us confirmation here as well. So you can use a couple different things with patterns. You can wait for a couple closes above a level, percentage moves, and then you can look for other things like momentum and volume to confirm as well. So whatever your rules are, stick to those guidelines, back test them, make some notes in your trading journal. I know that's kind of been one of a feedback pieces that we've seen in the survey results for this class is maybe just kind of where to log trades and things like that. If you go under tools and go to ThinkLog, there is essentially an entire section here where you can make notes on your orders. So you can make your notes here of what you used as confirmation, how much conviction you had, and so on. And then you'll notice that on these orders, you can actually, if you right click on them, you can actually view ThinkLog notes on each order. So I'll show you that on the next time that we place a trade. So for this one, let's take a look at a couple different things. So we still are in the lower half of implied volatility percentile here, but we could take a shorter term trade and take this a little bit differently than we did before, because we still have a bullish bias, but maybe we're saying that for our time frame, maybe implied volatility is a little bit elevated than we normally like to trade for a long option trader. So maybe we take a look at a short put vertical in this scenario. And maybe we use this level of 156 or so as kind of our level of support and a level of attention there. So if we go to the trade tab, we're going to look a little bit shorter in expiration for this one. Okay, so we're going to look shorter and we're going to say we're looking about 23 days out from expiration. Let's start with that one here. We want the time decay to already kind of kick into high gear. And we want to see what the options market can give us here, okay? So what we're looking at, we have our put side here, okay? And we can look at the deltas, which will give us that probability. And let's just say we are looking for a 5 wide spread, okay? So let's just say we're going to use, what was that level? Was that 156? Okay. So let's just take a look here. Okay, so we don't have a ton of volume, a ton of open interest, so the spreads are kind of wide there. Let's take a look at the monthlies here. Let's see if these are a little bit better. So this is about 30 days out from expiration. Okay. We do have some more open interest here. The spreads are a little bit better here. They're still not entirely desirable. But what we could look at, maybe we just sell a short put instead of selling a put spread. Maybe we sell a put here. And so what we could do is we could look at that 155 strike and we could look at selling this put to say that if the price of the stock stays above this level, and we can kind of go for the midpoint here, but if the price of the stock stays above 155, which was just under our level of support for the price pattern, we're going to keep this premium of $2.38. Okay. Now we do have to have $15,500 available for the purchase of that stock if the price of the stock does expire below 155. Okay. So if it does expire below 155, that's where we're going to get the stock put to us. We're going to end up buying it at 155, but we snagged a couple $100 along the way, which makes us have a lower cost basis into this position. But we're pretty bullish on this so far, so we think that for the next 30 days or so, given just this long-term pattern here that's taken place over the last 3 months, we think that the price of the stock will stay above this level. So that's what we're going to go with here, okay? And so we're going to hit confirm and send, and we're going to send this to our price patterns class. We're going to hit send. Okay. So we have that one in. Okay. Now, I know we have about 10 minutes left, and I want to take a look at some of these other examples that we are going to be looking at trading as well. Now, this is one we don't talk about too often, but we have a little bit of a channel here, okay? So we're going to talk real quick about how to trade a channel. So what you're seeing here with Visa is essentially a descending channel that we just saw. So this is essentially lower highs, lower lows, where if you draw a line connecting those highs, connecting those lows, it creates two parallel lines, and we call that a channel. In this case, since it's slanting down, it is a bearish channel or a falling channel. We call it a descending channel, okay? So, what we're going to do with a falling channel is essentially we're going to look to trade the bounds of this channel. And so we're going to say, okay, we're going to look for confirmation of a close below that high, or the close below the low of the high day to give us confirmation that we're going to have a lower low. Okay. And then when we see the lower bounds of this channel, we're going to look for a close above the high of that low day, so which we saw, to give us confirmation of a move higher. And so you can be a trader of these channels. You never know how many touches of support or resistance it's going to create, but eventually price is going to break out of the bounds of that channel like it did there. Okay, so you guys see that. You see that here. And so if you are looking to trade a breakout of a channel, which again, this is something that we really haven't touched on too much in this class, and I want to make sure you guys know how to trade this one as well, because we don't see these as frequently. So you're going to use the same principles. The same principles apply. You're going to take an entire move of the depth of this pattern. So you're going to look at a level of resistance measured to support of those parallel lines. So you take the width of the parallel lines, which is about $20.50. $20.50 here on Visa. And you're going to add it to the breakout point or subtract it from the breakout point. So if price would have went down here, let's say price made a resistance bounce and went down here and broke below, you would have taken that same measured move to the downside, okay? So we've already seen a little bit of a breakout. Now I will tell you something here. When you see these breakouts, a lot of times with rising and falling channels, you may see a retest of that old resistance, new support, okay? So what we're going to be looking for here, now you could say, okay, well, there's about 2 closes outside of this range. I could take a long position and target all the way up to 347. So that gives me another $15, $16 to the upside. And you could put your stop right at the low of that breakout candle. So that gives you essentially a favorable risk to reward. So you have about $6 or $7 to the downside. You have about $16 to the upside there. So that's one different scenario on how to trade this. So if you're wanting to trade that breakout, 2 closes above that level will give you that confirmation. Okay. And that would be kind of what your target would look like, okay? And then that's where you could put your stop, manage risk to the downside. Another thing that you could do with some of these, if you miss the initial breakout, now there is still a favorable risk to reward. So a trader may say, hey, we didn't miss a breakout here because the risk to reward is still favorable. But let's just say the risk to reward wasn't as favorable and you still wanted to keep your risk management on the low of that breakout candle, you could say, hey, I may want to wait for a retest of support. And so what you would be looking for is for price to bounce off of the upper bounds of that channel there to then take, again, a risk defined entry to target 347 there, okay? So what we're gonna do in this case, in this scenario, we are going to just place a real quick trade, just a stock trade, and we're gonna use these as our entries and exits, okay? So we're gonna go to buy custom. We're gonna use our 10,000 OCO, and we're going to say that we're gonna enter right now since we have had a confirmed break. And we're gonna put our stop down at 324.38. And we're gonna put our limit at 347.74. Okay, whoops, 347.74. I don't know where all those extra things were. Okay. So that's still staying within our risk parameters. It's going to do the math for us, and we are going to not lock these together. We're going to make this one a day order for our market one, and we're going to make the other two a good till canceled. So this is how you trade a channel, okay? A channel breakout, okay? So we're going to hit confirm and send, and we're going to send this to our price patterns class here. Okay, there we go. So it did the math for us. We bought about 30 shares there. Barbara, I have a question for you. How often on average does the breakout retest the top of the channel? Honestly, I do not have the data for it. It's just kind of something I've seen when I've looked at different channels. I'm sure there's some back testing software somewhere that may be able to tell you, but I do not unfortunately have the data for that. So what I would suggest is trading it like any other pattern. So having what your confirmation is giving you, whether it's two closes, 2 percentage points above a certain level, maybe it's that volume confirmation with price, whatever that is, still sticking to your system, still having those risk management levels in play. So just treating it just like any other trade. Um, Having that system set in place. Now let's uh, give me a couple minutes to review the chat. Yeah, not sure what's going on in the chat today. Let's just keep everything respectful of everyone here. And thank you, Mike, for helping us out in the chat there. Now let's take a look at a couple other examples or patterns that we have with just the minute or two left. I have them all marked on the left side here. So let's take a look at what we did. So we placed a couple different orders here for DoorDash, for Visa, and then we had one that filled for 3M. Okay, so we placed 3 different trades today. Okay, so all those got filled. Now, if you look at a few different other ones that we have, we may have something going on in MasterCard. Okay, I don't know if you guys can kind of see this on the 90-day 4-hour, but we may have a little bit of an inverse head and shoulders. It's kind of getting retested right now on this 4 hours. So you have the left shoulder, the possible head, the possible right shoulder. You notice a lot of these are in financials. JP Morgan, whoops, just made its way to new highs. Let's take a look here. We had another channel here. So we have another channel in Southern Company. So we just talked about how to trade it, and we're getting that confirmation of that bounce now. We actually had a false breakout the last time. So that's another kind of trade opportunity there where we're having that close below the low of the high day. So you could be looking for the lower bounds of that channel yet again. I would kind of suggest, since we're at time, you guys take a look at some of these other patterns that we are seeing here, or these other names that I have on this list. We have a little possible double bottom here, but I just want to thank you guys all for all of your questions, comments, everything, your engagement in the chat. I know Mike has been helping us out quite a bit, so thank you guys all. Please smash that like button. Please give us both a follow on X, and please subscribe to us on Trader Talks Schwab Coaching on YouTube. Have a great rest of your day. See you later, traders.